We can use Fibonacci retracements and extensions to perfectly time our entries and exits for trades. This is a very simple strategy, and I'll leave all of the steps for this strategy as timestamps down in the description. So step one is to figure out what time frame do we want to trade on, and are we in a trend that we can use with Fibonacci's? Because you're looking for a Fibonacci strategy, right? Fibonacci allows us to time entries during drawdowns or pullbacks within a trend. So we are looking for those. The first thing we need to figure out is what time frame and are we in a trend? So the first thing, I'm trading Bitcoin here, Bitcoin trends, so we can figure out where are we in the trend. The best way to do that is to look at Bitcoin halvings, 4-year cycles. For about 6 months before the halving and 1 year after the halving, we are in general uptrending markets. Okay, so we're in an uptrend if we're in that period. From there, all we have to do is figure out what time frame are we trading on, and can we use Fibonacci to actually identify pullbacks within those uptrends. So that's step one. I'm going to be trading on the 1 week chart. If you're a beginner, I think this is better. If you're trading lower time frames, 1 hour, 4 hour, it's very noisy and you're going to get chopped to bits by algorithms and, billion-dollar hedge funds that are trading. Let's go on the 1 week, make it simple, and we can trade this trend. Step two is to draw the Fibonacci retracement on our chart. I'm using my trading system, which is Bybit. You can use TradingView, which is great and free, or your trading system. So I'm going to leave a link to Bybit in the description. They give a deposit bonus for new users up to $30,000. So if you do trade, you can check out the link below to Bybit and some of the other exchanges that I use. On the left-hand side, we're going to go to the Fibonacci retracement tool, and then we're going to draw it on our chart. How to draw a Fibonacci retracement? We go from the low to the high of an expansion. So this is very clearly a low and a high right here. We have the high, which got rejected. This is the start of that move, right? The big move up to a new high and then a rejection. So that is the move that we are plotting the Fibonacci retracement on. So Fib retracement, we're going to go from this move right here to the low wick, all the way up to the high wick right here. Now, if you want to know my settings and what Fib settings to use, I'll just go to settings here. This is it. These are the key levels for me. Some people use others, but these are very simple and really plot the key levels for Fibonacci retracements. So you can screenshot that and see my levels here and the colors and the trend lines. You can also see background here. I'll just turn off background, press OK. So this is the level right here. Now I've plotted this as a trend from low to high. And as you can see, when we do get this drawdown, we are coming into these Fib retracement levels. So the first level, we hit it many times. We actually wick down right here into the second level. So immediately, if we're trading these levels, we're already getting entries on these pullbacks. Fibonacci retracements is a way to plot drawdowns within uptrends. So yes, at the start of this uptrend, you would have been better just to have gotten in early and rode the trend. But that's not what this tool helps us do. It helps us identify areas where a expansion has topped out and will retrace a certain amount. So we get the top of the move, we plot that, and then this gives us eventually where a potential drawdown may get to. So from here, how do we input orders? There's a few ways to do this. You can see I've got 3 retracement levels here, right? So the first one is to place limit orders at each of these 3 levels. If your entire order is 100%, you could put a third of the order as limit orders here. Another way to do it is just to put 50% of the order at the top, another 50% second down, and assuming that because Bitcoin is in an uptrend, a big drawdown to this level may be unlikely. It's up to the individual, right? You could put 100% of your order at the 0.5 drawdown. It's really up to the individual about how you feel, how eager you are to get into the market. So that's up to the individual. So what we're going to do here is place a limit order. So on a trading system, you'd go to open, limit, and then put the order price in. That order price would be right here. So on the right hand side, you can see that would be around 56,724. You don't have to be too accurate with this. You can put an order in around a level that you think would be a good level for the drawdown. So 55,000, 57,000, something like that. Put the amount that you want to trade in. And then you would just simply open long right here. So that would be the open. Like I said, one order, multiple orders, it's up to you. Now, if you're day trading, you obviously want a stop loss here in case the trade goes wrong. So you can put a stop loss in at any level that you want around this. These are actually entry levels for a Fibonacci retracement. So I wouldn't be putting any stop losses in around these levels, but you can put a stop loss in at some area below that that would essentially invalidate your trade, right? So if you got a drawdown to the previous levels, that indicates a major drawdown and a potential reversal. So I would put this at some level below this entry point. So let's say 10 or 20% below, something like that. That would definitely be a huge drawdown and something's gone wrong. You got in at these levels, you want to get out. So you would put a stop loss in somewhere around this level. Again, you don't have to be too accurate, maybe a round number, 46,000, something like that. How do you put a stop loss in? You can take profit stop loss here when entering the order. And you want a stop loss down here, 46,000, something like that. You can enter that on the system. So you have the entries and a potential stop loss. That's if you're day trading. If you are just looking for entries because we're in a bull market and you want to buy it and you want to hold, then obviously trading in the spot market, you don't need to put stop losses in. You can just accumulate knowing that you're going to hold for a much longer time. Again, all of that is up to the individual, what you want to trade, how active you want to be, right? That's up to the individual. But using Fibonacci, you can definitely see these clear lines. These are the limit orders that we can put in or the places that we can trade. These would be normal drawdowns within uptrends for Bitcoin. Now we can use the Fib extension tool to give ourselves a potential exit price for this trade. So we've used the retracement tool for our buy limit orders around these prices. You would have got some or all of your order in here. The extension tool is going to give us potential areas. So trend-based Fib extension, draw it in the exact same way. This price level, first touch, second touch up at the same price here. And then the third one, we just go across to draw out the line. I use these levels, which is the same as the retracement. Many other people may use some others. I think these are great. So I'm going to go to settings here just to show you. This is what I'm using. And that's that. So now we have potential extensions where a uptrend may continue to. So again, it's up to the individual. Do you want to place 3 sell orders to take profits at these levels? Do you want to look at the right-hand side and say, I think this price, this area is pretty good to get out, so put some limit orders in there and get all of your trade done? Do you want to just get out a little bit early and take some profits here? That's up to the individual. These are the 3 areas that I would look to. We can also do some price analysis ourselves. Look to the right-hand side. We're getting up into the 90 to 100,000 area, which is obviously going to have a huge amount of resistance up here because 100 is just such a key level that many people will be taking profits at. 6-digit Bitcoin. So you have a lot of volatility here, getting rejected, maybe moving through. So it's up to the individual about how long you want to be in the trade, what you're doing, and how you want to take risk. That would be an area. So we can go to limit. And if you're trading futures and derivatives, you just go to take profit and put in your amount, your limit order, either 1, 2, or 3 or whatever, just a blended price. If you're trading in the spot market, then just put limit orders here, right? So limit, sell, and put your price in here. Now, what Fib can't tell us is fundamentals. Is something going to happen in the market? Is there some news that comes out? Whatever. That's going to drive the price. Fib can't tell us that. So we have to still rely on fundamentals and understanding where we are in the market and a lot of news flow and everything like that to dictate our bias. Are we positively biased? Do we think we're still in a bull market? Or do we think that a downtrend or a bear market is going to actually commence? That's not going to help us because Fib is trend-based. So if we're going into a bear market, Fib's not going to work. It's just not going to work. This gives us some specific entries, but we still need to use our research and our analysis of the market to tell us, are we in an uptrend and are we going to continue in that uptrend over time? That's going to influence our bias as to whether we want to actually buy pullbacks or not. I've got a lot more on that. I'll leave some videos below that go through trend analysis. I think it's really worth watching them. They're free on YouTube. Crypto Investor course. I update all of my research in there for free. And we've got Discord groups where, everything is updated. So I'll link all of that below, plus the Bybit deposit bonus down there as well. I'm James, this is my ZG. Cheers for watching, and I'll see you in the next one.